So, Canada just made a trade move that left the United States completely stunned. This isn't just another tariff dispute or political squabble, it's something far bigger. Donald Trump was reportedly so rattled that he flew to Ottawa personally to confront Mark Carney. No envoy, no phone call. The U.S. president boarded Air Force One to sit across the table from the man who just upended decades of trade assumptions between these two nations. The Canadian Trade Sovereignty Act went into effect overnight with no warning and no phase-in. Hundreds of billions of dollars in energy, minerals, and commodities were legally redirected away from the U.S. and toward Europe, Japan, and the U.K. at prices the U.S. cannot match. Warren Buffett called it the most consequential trade move by a middle power in modern economic history. And yes, it's completely legal. Washington has no leverage to stop it. Think about it. Canada is not retaliating in the traditional sense. They're not imposing tariffs or sanctions. They're diversifying their customer base. Mark Carney framed this publicly as an act of sovereignty, not retaliation. In his address to Canadians, he said, "Canada will no longer allow its economic future to depend on the decisions of a single trading partner. We are a sovereign nation, and sovereign nations diversify." That's brilliant. By framing it as sovereignty, Carney made it impossible for the U.S. to claim Canada was attacking them. It's just smart business. 1. Diversification quotas. No single country can receive more than 50% of any Canadian commodity category. The U.S., which previously received 70–80% of Canadian oil, lumber, and minerals, will now get significantly less. This alone redirects hundreds of billions in trade away from America and toward Europe and Asia. 2. Preferential pricing. Canada signed framework agreements giving Europe, Japan, and the UK discounted pricing, 8 to 12% cheaper than US rates. These deals were pre-negotiated and ready, waiting for Carney's signal. 3. Critical minerals. Licensing lithium, nickel, cobalt, potash, uranium, all US-bound shipments now require federal licensing. Licensing is subject to a national interest review with no fixed timeline, creating uncertainty. This uncertainty disrupts manufacturing more than a ban ever could. 4. Energy export recalibration. Canadian oil and natural gas exports to the U.S. will drop 15% over 18 months. Existing pipelines will redirect to new Atlantic and Pacific terminals for Europe and Asia. Buyers, contracts, and construction are already in place. Canada is not experimenting. This is structural. Each of these pillars individually is impactful. Together, they reshape North American trade. The U.S. government was caught completely off guard. Trump reportedly learned about this from cable news, not intelligence briefings or his trade team. The emergency meetings were called at the Pentagon, Treasury, and Commerce, but traditional levers, tariffs, sanctions, military threats cannot work against a legal and well-prepared diversification strategy. Pentagon concerns: 60% of U.S. rare earth processing relies on Canadian minerals. Fighter jets, submarines, and missile guidance systems depend on Canadian nickel, lithium, and cobalt. Corporate America panic, energy companies, automakers, and tech firms scrambled to assess supply disruptions. Stock market reaction: energy stocks fell 5 to 8%, and the S&P dropped 400 points within hours. The U.S. realized this wasn't a temporary problem. They were facing structural dependency disruption. Trump demanded a personal meeting, but Carney insisted on Ottawa, home turf. This choice sent a clear message. Canada was negotiating from strength, not weakness. The meeting included only 8 people, 4 from each side, no press, no cameras, just facts, data, and strategy. Carney didn't argue. He presented a binder with printed charts and projections. Economic losses from U.S. tariffs over the past 18 months. Job losses in Ontario manufacturing, revenue declines in Alberta energy, factory closures in Quebec aerospace, community-level impacts across the Maritimes, Saskatchewan, and beyond. Then he presented 2 futures: Canada dependent on a hostile trading partner, vulnerable to tariffs; a diversified Canada with stable trade relationships, resilient and stronger. Trump reportedly reacted with frustration, but the data left no room for negotiation. Carney's plan was already in motion. Warren Buffett weighed in at a private dinner. Canada identified a dependency, quantified it, and leveraged it strategically. The only difference is, I do it with stocks. Carney did it with a nation. Buffett emphasized the U.S. assumed Canadian resources would always be free-flowing, cheap, and reliable. Carney proved all three assumptions wrong. This structural shift cannot be undone with tariffs or executive orders. Corporate America is now planning for a future with less Canadian supply, a major shift in sourcing and logistics. Canada becomes a top 5 global energy exporter by the end of the decade. Framework agreements with the EU, Japan, UK, and South Korea lock in long-term trade partners. U.S. supply chains, defense production, and tech manufacturing will adapt to this new reality, potentially at higher costs. This isn't retaliation, it's strategic sovereignty. Canada didn't fight back. They built a stronger, independent economy. Washington is stunned. Businesses are scrambling. And the lesson here is clear. When you treat your most important partner as disposable, they eventually prove you wrong. Mark Carney's move wasn't impulsive. It was calculated, legal, and structurally transformative. For Washington, this is a wake-up call. For the rest of the world, it's a masterclass in strategy, diplomacy, and trade. Stay tuned, because this story is just beginning and its effects will ripple for years to come. Hit subscribe if you want to follow the next developments, because the US-Canada trade landscape just changed forever.